all those yet outside, we just got a live feed from the adjoining foyer, and we could see on the screen there are yet many people who are outside, all you delegates, invitees, media representatives, participants, esteemed guests, distinguished dignitaries, requested to please proceed to the conference room. We are expecting our chief guest any moment from now, and as soon as he arrives in this hall, we commence the inaugural session of FIBAC 2025, jointly organized by FICCI, which is the Federation of Indian Chambers of Commerce and Industry, and RBI, the Indian Banks Association. So we are all set to begin. I yet see a few people standing at the rear end of this hall. Some of you are standing towards the sides. Could I request one and all to kindly take your seats? And those who have just about walked in, let me remind you to please turn your cell phones to the silent so as to avoid disturbances during the proceedings. Thank you for your cooperation.
दीपक ने फोन किया था आ रहा है गवर्नर
I announce the arrival of our chief guest, Shri Sanjay Malhotra, Governor RBI. Let us welcome him with a resounding of claps, ladies and gentlemen. We also have with us Mr. C.S. Shetty, Chairman IBA, Mr. Atul Kumar Goel, Chief Executive IBA, Mr. Harshvardhan Agarwal, President FICCI, Madam Jyoti Vij, Director General FICCI, and Mr. Ruchin Goel, MD and Senior Partner, BCG. A very warm welcome to all of you. So, ladies and gentlemen, on behalf of FICCI, that is the Federation of Indian Chambers of Commerce and Industry, and IBA, the Indian Banks Association, it gives me, Manasi, immense delight in extending a hearty welcome to all of you, especially our esteemed guests, distinguished dignitaries, all you invitees, delegates, participants, and media representatives for the inaugural session of FIBAC 2025 with the theme, Charting New Frontiers. In keeping with the Indian tradition, the function will be inaugurated by lighting the auspicious ceremonial lamp, and I request our chief guest, Shri Sanjay Malhotra, Governor RBI, to please do us the honors. I also request Mr. C.S. Shetty, Chairman IBA, Mr. Atul Kumar Goel, Chief Executive IBA, Mr. Harshvardhan Agarwal, President FICCI, Madam Jyoti Vij, Director General FICCI, and Mr. Ruchin Goel, MD and Senior Partner, BCG, to please join in. Deepene lokana jayati, deepastejo mayaha smritaha, chaturvarga pradodipan, tasmat deepyajet priye. This couplet in Sanskrit translates, the lamp is luminous, its radiance grants victory, its light imparts dharma, artha, kama, and moksha, that is, righteousness, prosperity, pleasure, and finally, emancipation. This is the significance of lighting a lamp, and hence, a lamp should be lit. Lamp, as we know, is also a symbol of knowledge, learning, and wisdom.
समप्रभा निर्विघ्नं कुरु मे देव सर्वकार्येषु सर्वदा वक्रतुंड महाकाय.
Let us take a moment for a group picture here, please.
सूर्यकोटि समप्रभा निर्विघ्नं कुरु मे देव.
Thank you. The lamp being lit, Lord Ganesha being propitiated, having taken his blessings for an obstacle-free conference, I request all the esteemed dignitaries and distinguished guests to kindly take their seats on the dais. Please. Let us once again have a huge round of applause for our chief guest, Shri Sanjay Malhotra, Governor RBI, Mr. C.S. Shetty, Chairman IBA, Mr. Atul Kumar Goel, Chief Executive IBA, Mr. Harshvardhan Agarwal, President FICCI, Madam Jyoti Vij, Director General FICCI, and Mr. Ruchin Goel, MD and Senior Partner, BCG. I will now request Mr. C.S. Shetty, Chairman IBA, and Mr. Harshvardhan Agarwal, President FICCI, to present a green certificate to our chief guest, Shri Sanjay Malhotra ji, Governor RBI. Ladies and gentlemen, this green certificate indicates that Shri Malhotra ji is honored with a grove of 10 trees at Trees for Ecotourism, Songo, Sikkim. Please accept this eco-friendly green greeting, which complements and reinforces our commitment towards environment and sustainability. With that, I will call upon Madam Jyoti Vij, Director General FICCI, to kindly take the proceedings forward. Ma'am.
Thank you. Good morning, everybody, to all the distinguished dignitaries, esteemed colleagues, and valued guests. It's in order to address this gathering today. Over the years, FIBAC has become one of the foremost platforms for dialogue amongst policymakers, regulators, bankers, industry leaders, and global experts, bringing together some of the sharpest minds in the finance and banking. And this year's conference is especially significant as it is taking place at a time of rapid global transformation. At this platform, we do generate a lot of ideas where various perspectives converge to chart a shared roadmap for the future. And the presence of the RBI governor, CEOs of the leading banks, and some of the industry leaders underscore the importance of today's discussion. We are privileged to welcome the chief guest, Mr. Sanjay Malhotra ji, Governor, Reserve Bank of India. Sir, your presence is a source of great inspiration to us, and we do eagerly look forward to your thoughts on the evolving role of the financial system in driving India's growth towards Viksit Bharat. To formally begin the proceedings, I now invite Mr. C.S. Shetty, Chairman of Indian Banks Association and Chairman, State Bank of India, for his welcome address.
So, good morning, everyone. Respected Sri Sanjay Malhotra, Governor RBI, Sri Harshvardhan Agarwal, President FICCI, Sri Atul Goyal, Chief Executive IBA, Ms. Jyoti Vish, Director General FICCI, Sri Ruchin Goyal, MD and Senior Partner BCG, and distinguished members from the banking and corporate sectors, and all participants in this conference. Governor Malhotra was just wondering, a lot of audience, I told him, sir, they're all here to listen to you. So I'm sure you're all eagerly waiting for him to speak. But before that, I just have a few thoughts as a welcome inaugural remarks. So once again, good morning and a warm welcome to all of you to this annual conference of IBA and FICCI. This joint conference of two associations, one representing the banking sector and the other representing the corporate sector under the brand name of FIBAC, is now 2 decades mature. For IBA and FICCI, it is a momentous occasion. I'm glad to note that this event evinces considerable interest among various stakeholders. We were quite keen to select a contemporary theme for the conference so that the participants derive fresh ideas and thoughts at the end of 2-day deliberations of the event, spanning across relevant areas connected with the overall theme of the conference. This year's theme of charting new frontiers is quite significant in today's context. The panel discussions have also been carefully curated to cover all aspects that will help in unlocking the potential of the banking system and the corporate world. We are at a transformational moment that could be the most consequential for next 20-25 years of the economic and social development. With a favorable demographic dividend, robust digital infrastructure, high growth potential, and a clearly articulated national vision under Viksit Bharat, the country stands at an inflection point. This is the moment to accelerate inclusive growth, enhance global competitiveness, and shape a prosperous and sustainable future. This is nothing but charting the new frontiers. The India of tomorrow will differ markedly from India of today. Over the past 3 years, the global economy has experienced geopolitical tensions to potential trade disturbances. These developments are reshaping capital flows, redrawing global supply chains, and contributing to heightened market volatility. Amidst this transformation, India is emerging as a global leader, an influential player in the geopolitical landscape. With the tag of one of the fastest growing, or the fastest growing economies in the world, which is projected to grow at 6.3 to 6.5% in the financial year, our country has presented a picture of resilience amidst various external disturbances. Honorable Prime Minister, in the Independence Day speech, also mentioned about the transformation of our nation dependent on others to a globally confident, technologically advanced, and economically resilient country. In this forward-looking vision and within the broader transformation, the financial services sector will play a pivotal role as both as enabler and a multiplier of progress. The past decade has been exceptional for Indian banking. The sector has seen a decisive turnaround driven by macroeconomic stability, regulatory discipline, and formalization of the economy. Credit growth has remained strong, asset quality has improved significantly, profitability has rebounded, with the double-digit ROEs and capital adequacy above regulatory thresholds, marking a golden chapter for Indian banking. The Q1 performance of the current financial year is also good, with some of the banks recording exceptional performance. In short, with impressive profit numbers and low stressed assets, the banks are in a position to play a very significant role in the growth of the Indian economy. So as we look at the future course of banking industry in India, along with the traditional areas which will continue to exist, new areas are also emerging for banks to innovate and lend. Of late, the corporate funding has shown some shift towards capital markets and private credit for their long-term financial requirements. So the banks have to definitely look to step up to finance the next wave of long-term capex, essential for India's growth ambition. Startup funding is another emerging area where banks are already involved, but needs to do more. I'm happy to share that IBA is playing a key role to make the startup funding by banks as a new driver of business growth. Another area where considerable expansion in credit growth was witnessed and is going to be a potential area for business growth for banks is MSME lending. As you all know, MSMEs are central to jobs and growth, but always starved of formal bank credit. Enablers like formalization and digital trails have made the lending safer and scalable to this segment. Banks have a unique opportunity to bridge the MSME credit gap, powering entrepreneurship and employment. Use of AI, Gen AI, helps the banking sector to complete several time-consuming processes within short duration. With the clear AI strategies, strong governance, and workplace reskilling, banks could increase the productivity. And the importance of AI is also recognized by the regulator when they came out with an AI paper. Judicious use of digital public infrastructure and data usage will help banks to improve their customer service, design suitable products needed for the customers. So I have shared some of my perspectives on charting new frontiers for the banking sector, which is the overall theme of the conference. Within this overall theme, the two-day program of FIBAC covers almost all segments of the banking sector, like corporates, SMEs, risk management, including cyber as well as climate risk, innovation in digital banking, human capital management, artificial intelligence, customer service, etc. I hope the deliberations from these panels and thoughts and ideas shared by experts would help the participants to have guidance for building the resilience of systems and processes to explore the new frontiers in banking. On behalf of the IBA and FICCI, I thank Governor Malhotra for gracing the inaugural session. Sir, your presence is very inspiring for us. I would like to mention that we have been getting full support and guidance from the RBI. The industry is very grateful to you on that. I would also like to assure you, sir, that we are focusing on improving customer service, financial inclusion, MSME lending, and also taking all possible steps to check cyber threats, the themes which are very close to your heart. Thank you, and Jai Hind.
Thank you so much, sir. Indeed, the golden chapter for Indian banking, getting ready to meet the vision of Viksit Bharat as we move forward. May I request Mr. Harshvardhan Agarwal, President FICCI and Managing Director Imami, to kindly deliver his opening remarks.
Shri Sanjay Malhotra ji, Honorable Governor, Reserve Bank of India, Mr. C.S. Shetty, Chairman IBA and Chairman State Bank of India, Mr. Atul Kumar Goyal, Chief Executive IBA, Ms. Jyoti Vij, Mr. Ruchin Goyal, distinguished delegates, ladies and gentlemen. A very good morning to all of you. We are especially honored today to have with us Sri Sanjay Malhotra ji. Sir, your presence makes this gathering particularly special and even more so as this is your first FIBAC as governor. We meet at a time when the global environment is as volatile as it has ever been. Tariff wars, shifting supply chains, and geopolitical tensions are writing the rules of trade and investments. For decades, trade has been the engine of growth. Today, that engine is sputtering. Investment that used to flow to the most promising markets are also being reviewed with a new added lens of geoeconomics. And yet, uncertainty also creates opportunity. FICCI's latest survey on global risks show how businesses are reading the landscape. 1/3 of Indian businesses now see global challenges as more daunting than domestic ones. Over half believe structural and geopolitical risks are overtaking pandemic-related concerns, and nearly 3/4 expect climate change to drive up costs and regulations. But here, sir, is the encouraging part. Even in this environment, Indian businesses see India as a future global leader in renewable energy, in defense and aerospace, in AI, in digital technology. The message is simple. The world may be volatile, but India stands firm and is poised to rise even further amongst the global committee of nations. On Independence Day, Honorable Prime Minister reminded us of the mission of Viksit Bharat, a developed India by 2047. And one of the core building blocks of this mission is Atmanirbharta. As Prime Minister mentioned, we must become self-reliant in areas such as semiconductors, critical minerals, deep tech, AI, renewable energy, defense, and the EV ecosystems. But achieving this requires more than just policy support. It requires a financial system bold enough to fuel new industries and resilient enough to withstand shocks. Prudence must always remain the foundation of Indian banking, but ambition must be the driver. So our banks cannot just finance growth, they must engineer it. The good news is that our banks are ready. They have been tested by the pandemic, by global capital volatility, by geopolitical stress, and they have emerged stronger than ever. Today, balance sheets are healthy, NPAs are at a multi-decade low, and profitability has touched record highs. For this, much credit goes to the RBI, and I must add here, sir, that you at the helm of affairs at RBI, we see this venerable institution guiding the industrial economy and the financial sector with authority, deep knowledge, and wisdom. Looking forward, there are few areas where collaboration between regulators, government, and industry will be critical. Let me highlight a few of these areas. First is the trade. The new US tariff, 50% on almost 70% of our exports, will hit sectors like textile, auto parts, chemicals, marine products, gems and jewelries, to name a few. But exporters will need liquidity and support from banks to weather this storm. When global markets close doors, our banks must open windows. Second, strategic industries. India cannot afford to rely on import for advanced batteries, critical minerals, semiconductors, or advanced defense equipment. Banks must be encouraged, perhaps through targeted incentives, to finance these future industries. Credit must flow where the future is being built. Third, MSMEs. By 2030, they will account for half of India's GDP and employ 150 million people. Yet, the credit gap remains large. We must move decisively towards cash flow-based lending, faster digital credit, and wider awareness of financial products. If MSMEs are India's backbone, finance is their oxygen. Beyond this, we must strengthen NBFCs as last-mile credit channels accelerate integration between banks and customs to ease trade, and embed climate sustainability into the very framework of priority sectors lending. Financing green is not a noble objective alone, it is a future-proofing growth. Friends, India stands at a turning point. The world around us may be turbulent, but our trajectory is clear. The banking sector is not just a financial backbone, it is a nation-building partner, resilient in adversity, innovative in solutions, and ambition in vision. The future of finance is not to follow the economy. The future of finance is to lead it, and we are sure that under the guidance of RBI, the Indian banking sector will further support the growth of our industries and support our enterprises as we together weather the current storm. On behalf of FICCI, I thank the Indian Banks Association and BCG for shaping this dialogue. We are grateful to both Sri C.S. Shetty, Chairman IBA, and Sri Goyal, Chief Executive IBA, for their guidance at every stage of preparatory work for this very important conference. Thank you very much. Jai Hind.
Thank you, sir, for sharing your valuable thoughts with us this morning. Ladies and gentlemen, time now to release the FIBAC 2025 report on the theme, Charting New Frontiers. As most of you know, the knowledge report has been a hallmark of every edition of FIBAC. It captures the evolving priorities of the banking sector and offers valuable perspectives on the path ahead. The report provides deep insights into the structural shifts, opportunities, and challenges that will shape the future of banking in India and beyond. I now request our chief guest, Sri Sanjay Malhotra ji, Governor of the Reserve Bank of India, to kindly release the FIBAC 2025 knowledge report. Ladies and gentlemen, these are moments to be treasured in the form of photographs, memories that will stay with us for times to come. And let us celebrate this by putting our hands together. Thank you. Thank you, everybody. Ladies and gentlemen, I will now request Mr. Ruchin Goyal to kindly come forth for the theme presentation. Mr. Goyal is the Managing Director and Senior Partner at BCG. Mr. Goyal.
Thank you. Respected dignitaries on the dais, ladies and gentlemen, it's an absolute privilege and honor for me to be standing in front of this august gathering and sharing the key findings of the FIBAC 2025 report, Charting New Frontiers. Now, as all of us are aware, the Indian banking industry has done remarkably well, be it the profitability in terms of ROAs and ROEs. Indian banks have about 1.5 times profitability than that of global banks. Or if you take valuations, price to book, at 1.9 times price to book, our banks are valued more than 2 times that of global banks. And asset quality, the gross NPAs at 2.3% is at all-time low that the banking industry has seen over the last 15 years. Now, there is enough research, sir, that shows that banking sector, a strong, resilient, stable banking sector, is a prerequisite for any economy to grow in a sustainable manner. And the Indian banking industry has all the strong foundations to enable India's journey towards a Viksit Bharat. Our report highlights 4 key themes that the banks need to embrace in this journey. The first one is growth. Now, if you take the last 15 years, as you will see on the chart on the right-hand side, the banking sector has grown at about 11.5%. It's just a shade below the nominal GDP growth of 11.6%. If we take other large economies, like those of China, Brazil, the banking sector has grown at a rate higher than GDP growth. And we all know that there's a multiplier effect. When the banking industry grows, the real economy also grows along with it. So going forward, our report suggests that if India has to become Atmanirbhar Bharat and a Viksit Bharat, our banking sector has to bridge a 3.5% growth gap to start growing at about 15%, so that our banking assets to GDP can become 1.5 times from about 0.9 currently. If you look at where the growth is coming from in different sectors, except for retail, all other sectors have grown at less than 15%, that is required going forward. And if I highlight corporates as a special sector, corporates used to be about 60% of the entire banking assets in 2011. It's come down to only about a third, 36% now, growing at only 8%. And as Mr. Sethi highlighted, that many corporates are now shifting away from banks. In fact, only less than 50% of bank funding to top corporates are coming from banks. They're looking at capital markets, and they're also looking at private credit. The challenge with this is that capital markets is not accessible to many mid-market companies. Also, private credit, NBFC credit is more expensive than bank credit. And wherever banks are lending, the share of term loans is further coming down. Now, this picture needs to change, that the banks need to finance the corporates so that we can have more economic activity in the country. If I shift my focus towards retail, in retail, overall the industry has done really well, but one aspect that is of concern is the new to credit customers. If there are 100 loans being given out, only 2 to 3 loans are being given to customers who do not have any credit from the formal sector. Just 2 to 3. If you take the entire adult population of India at about 100 crores, only a third of them are active in the bureau. And if you only add 2 to 3% every year to the formal credit, we will take a very, very long time where there would be meaningful inclusion in the country where people have access to formal credit. Now, this needs to change. What our report also shows is that there used to be a considerable gap between the credit quality of ETC and NTC, but that gap is narrowing. So banks can look at financing more and more of new to credit customers to increase inclusion. Another aspect, that is of concern is the rise of digital frauds. What's happening is, if you take overall NPAs, the numbers are quite good. But if you take in terms of number of loans that are being given out, almost 4% of loans are fraudulent loans, where within the first 6 months, the account becomes NPA, and this number is going up. Also, if you look at the credit underwriting standards, we see a very large difference between the top performers and the bottom performers, which means that banks and NBFCs should embrace the richness of all the data that's available in India to further improve their underwriting standards. Moving on, if I look at productivity as another metric, India, despite having the world's best digital public infrastructure, is the only large banking economy where OPEX to asset as a ratio has actually gone up over the last 15 years. In every other market, there is a declining trend on OPEX to assets. And the reason, if you look on the right-hand side, is that while the income is growing at about 11.5%, the costs are growing slightly faster. And one of the biggest cost increase has been IT costs. IT costs are growing at about 17% year on year over the last 15 years. In fact, the IT costs today are 5 times that of 2015 that the banks are spending on IT. Despite this, if you look at the overall IT costs that Indian banks are spending, they are still lower than global banks. At about 5% of our overall revenue, it's half of what global banks spend, which means the IT costs will continue to rise. The question is, where is IT cost going? And the trend is actually quite encouraging, that 2 years back, when we asked in our survey the question, only 25% of the IT cost was on true innovation, the rest was just to run the bank. Now that ratio is improving, and going forward, this ratio should actually become half and half, where 50% of the IT cost can be spent on innovations which can bring true productivity improvement in the banking sector. Now, one way to look at productivity is to look at the overall growth in our banking income. If you take 11.8%, the growth in income, and if you subtract first inflation, then growth of employees in the banking sector, and then wage inflation, the true productivity improvement is only 1%, just 1%. Now, this has to change. And we are today standing, I think, in the midst of very advanced and new exciting technologies like AI and Gen AI. And many banks around the world are experimenting with it. And, we feel that about 35 to 50% of jobs can get reshaped if banks are able to boldly embrace these new technologies. And that will be a prerequisite if the banking sector has to break the sticky cost structures that they've been encountering over the last 15 years. Moving on, we did a large customer research as part of our report. And what we find is that most customers actually feel that it's not their banking app, it's the payments app, social media apps, or the entertainment apps that are very intuitive and user-friendly. But despite that, when we ask the question, where would you want to start your lending or your investment journey, 60% of them still prefer bank apps because there is trust with the banks. Banks are regulated by by RBI, and they do not want to start these journeys in a social media or an entertainment app. But when we ask the question, how many of you are trying these journeys, there is a large 60% drop at the top of the funnel because people are either unaware or they lack trust or the processes are very complex. And despite people who start the journey, the 40% who start the journey, there's another 30% drop because people feel that the processes are quite cumbersome. Now, what we have seen as a spectacular rise of digital payments in India, and we call it DPI 1.0, I think there is time now in terms of DPI 2.0 that this picture can change, that banks can make their processes as simple as digital payments, and we can see a fast rise on both lending and investments using digital bank apps. So what is the future of banking? The future of banking could look something like this, that it is a conversational banking. We don't even need an app. We can just talk to a bot. It could be text, it could be speech. But for that, what banks will require, they will require 5 things. They will require a modular and native AI stack, an autonomous agentic-driven orchestration layer, real-time hyper-personalization, a conversational UI UX that we can interface with the customer, and finally, of course, compliance by design. So to summarize, our report, highlights these 4 themes. Theme number 1, we need to expand our credit growth faster than what we've been doing in the past. We need to unlock real productivity, or justify inflation, or justify headcount. We need to make our digital processes simpler so that customers can adopt it. And finally, banks need to embrace resilience, not just credit risk, but all the different kind of macro risks that they're facing. And in this journey, there's a role, of course, that the regulators and the government can also play. And our report has also highlighted an agenda for them. From the government perspective, we can continue to fast track the implementation of DPI 2.0. We feel all the fundamental building blocks are in place, but the journey needs to get accelerated in terms of adoption of account aggregators, of ULI. The second is ensuring there is standardization of our processes. A simple process like KYC, still is quite complex, and it differs by different regulators. And third, increase the digitization of our land records so that it makes it easier for banks to start lending. And for the regulator, we are again highlighting 3 points. The first is, can they allow for greater flexibility for banks to start financing the new India so that the corporate rate can start growing faster? The second is to actually build world-class utilities. India has really benefited from many utilities. We can build a few more in the area of climate risk, in the area of ALM. And finally, leverage the power of AI. Like the way we talked about banks, the regulators can also embrace AI in terms of their compliance so that it becomes more effective and more efficient. So with these themes, I would like to thank the audience for giving me an opportunity to present our report. Thank you.
Thank you, Ruchan, for your insightful presentation. The Indian banking sector has indeed been performing incredibly well. But to maintain the momentum and align further with the needs of Viksit Bharat, there is a need for a structured plan, and you just highlighted some of those aspects, and I'm sure they'll be taken note of. Ladies and gentlemen, it's now my distinct privilege to invite our chief guest, Sanjay Malhotra ji, Governor, Reserve Bank of India, to deliver the inaugural address. Request you all to please welcome him with a round of applause. Mr. Malhotra, an IAS officer of 90 batch and Rajasthan cadre, took over charge as the 26th governor. And I would just like to say that his openness to ideas, convert this into action plan, and speedy implementation is what sets him apart. Thank you so much for your time, sir, and welcome once again, sir.
Thank you, Jyoti. All the distinguished members on the dais, starting with Mr. Sethi, the Chairman of the State Bank of India, Chairman of the IBA, Mr. Atul Goyal, the CEO of the IBA, Mr. Agrawal, FICCI President, Ms. Jyoti Vij, DG of FICCI, and Mr. Ruchir Goyal, BCG, who made a very insightful presentation on the banking sector as it stands today. Good morning to all of you. It gives me immense pleasure to be in the middle of the leading lights, the captains of the industry, especially from the banking and the financial sector. It's brought together all of you, thought leaders, various stakeholders, and I'm sure that this conference, which is the second edition by IBA and FICCI together, will be deliberating on some of the very contemporary and critical issues facing the Indian economy and especially the financial sector. The topic of this conference again is very, very topical and very relevant, charting the new frontiers as we stand at a very critical juncture amidst challenges from geopolitical tensions and tariffs and so on and so forth. I'm sure that the discussions will be very fruitful and useful for the industry, for the government and for the regulators, and it will provide us a way ahead. It will provide us with some very good guidance and suggestions on the way to move forward, especially at a time when we are looking forward to achieving our vision of Viksit Bharat. And so I compliment the IBA and the FICCI for taking this lead and organizing this conference. We celebrated our 79th Independence Day 10 days ago. We have made huge progress since our independence across sectors of education, health, rural, urban development, electricity, power, finance, governance, defense, science and technology, so on and so forth. The Indian economy also has expanded manifold. It continues to be a symbol of resilience and hope. The achievements of the Indian economy, despite unprecedented challenges in the last few years, are undoubtedly very creditable and widely recognized. The Indian economy today is characterized by robust macroeconomic fundamentals. The Indian economy rebounded post-COVID. We recorded 8% per annum, almost 8% per annum growth CAGR in the last 4 years. The IMF projects that we'll again be one of the fastest major economies in the world. And we are all set and projected to be the third largest economy in the coming years. The inflation at the same time, over the last decade, especially after the inflation targeting framework was introduced, has been very benign. It's much lower than what it used to be earlier at about 4.9% per annum. This July, we had the lowest inflation at 1.6% headline for the last 8 years. The Indian government's fiscal position is also very strong and robust, having decreased its fiscal deficit now from 9.2% post-COVID and projected to go down now to 4.4% this year. This is not, at the cost of quality expenditure. The capex, as you are all aware, has been growing, and now it is projected. This year, it is budgeted at 4.3% of GDP. This, of course, includes grants in aid to the states. And similarly, the corporate balance sheets are very healthy. Mr. Sethi pointed out at the robust and healthy balance sheets of the banks, whether it is profitability, solvency, liquidity, and asset quality. My compliments to the industry, especially banking sector, for this stupendous performance and this turnaround over the last decade. India's external sector, again, I need not, speak more about it. It's been very comfortable. The current account deficit over the last few years has been well within the sustainable limits. Last year, it was only 0.6% of GDP. And of course, this is because of strong exports in services and very healthy inward remittances, for which India today actually has the record of being highest recipient. We have very robust foreign exchange reserves, $695 billion US dollars, as per the latest figures that are available with us, sufficient to cover 11 months of merchandise exports. This has been all possible because of the very strong and prudent fiscal and monetary policies followed by the government and the various regulators over the last few years, structural reforms, massive upscaling of both physical and digital infrastructure, improved governance, and enhanced productivity and competitiveness. We are now at a critical juncture, as noted by some of my earlier speakers, as we navigate the choppy global economic environment characterized by heightened trade uncertainty and persisting geopolitical tensions. We need to push the frontiers of growth. We all must step up our efforts to address the emerging challenges and at the same time seize the opportunities that are coming our way. Generations of freedom fighters gave us free India, a Swatantra Bharat. We need to now work for a Samridh Bharat, a prosperous India. In this backdrop, I thought it appropriate to speak on what we collectively need to do to further build on this economic development in our country. I have divided my thoughts into 5 major areas: monetary policy and regulation, and 3 relating to the banking industry. Mr. Sethi has made my task a little easier by mentioning them up front, so I'm thankful to him, for having already acknowledged that we need to improve further financial inclusion, customer service, and technology. Again, something which even the BCG report talks about and emphasizes. The role of monetary policy, first of all, monetary policy. The role of monetary policy in economic prosperity is critical. One of the major conduits of macroeconomic stability in India during the recent years, despite many shocks, has been the decline of inflation, as I noted even earlier. Sharp spikes in food prices, volatile oil prices, global supply chain disruptions, and geopolitical tensions could have significantly stoked inflation. However, proactive policy measures by both Reserve Bank of India on its part and supply-side measures by government have helped contain the generalization of price pressures. Anchored inflation expectations too have supported stable consumption patterns and improved investor confidence. The primary objective of monetary policy in terms of price stability has significantly contributed to the strength of India's macroeconomic fundamentals. At the same time, the Reserve Bank has not lost sight of its objective of growth. When, for example, before COVID, when growth was slowing, and even in recent months, when inflation has been benign and growth needed to be supported, the Monetary Policy Committee reduced the policy repo rate. And so we will continue to conduct monetary policy with the primary objective of price stability, keeping in view the objective of growth. Coming to regulation of banks and NBFCs, they still continue to occupy a very, very major portion of our credit needs. 73% of the total credit needs in our country, they are satisfied, met by the entities which are regulated by the Reserve Bank of India, including the banks. The banks contribute about 53%, remaining 20% coming in from the NBFCs, the HFCs, the All India financial institutions, and others. This shows the importance of the RBI regulated entities in meeting the credit needs of the economy, and it has been our endeavor to regulate these entities with an aim to ensure that the financial system remains healthy and grows sustainability. Regulation, I would like to mention over here, is that it's akin to friction. If friction is too less, which some people will demand, one will fall while walking. And if it is too much, on the other hand, it will certainly impede progress. Regulations provide the necessary friction to promote financial stability and safety of depositors' hard-earned money. However, stringent regulations may impede growth of the economy. The art of regulation making lies in finding the right balance between safety and growth, the right amount of friction, in other words. Pursuit of this balance or optimal regulation has always been our constant endeavor in the RBI. And so we have followed now 5 principles in our regulation making. You're all aware of these 5 principles. I'll not go into the details of those principles. First of them is that we have now moved more towards principle-based regulations rather than being prescriptive or rule-based. We have espoused the idea of proportionality to strike a balance between the costs and benefits of regulation. Impact analysis, I may mention here, is an integral part as to how it's going to impact each and every regulated entity, be it small or big. We have been consultative in our approach. We do various outreach programs. We have started the Connect to Regulate platform through which we reach out to all our stakeholders and the general public seeking suggestions on our regulations. Fourth, we have attempted to be evidence-based, data-driven as far as possible. We gather a lot of information. I think there has been a feeling that there is a lot of information seeking that is happening now from the RBI, but information is important for decision making, and I would request all the regulated entities to kindly assist us and provide us this information as quickly as possible in our endeavor to improve our regulation making. Fifth, we have been agile. We have adapted with change in context. We have course corrected with availability of new information and evolving landscape. And we have not hesitated in relaxing a stringent rule once deemed necessary if the context changes and the cost-benefit balance reverses. What we do as a matter of practice has now been institutionalized. As all of you are aware, recently we had issued the framework for regulation making, which codifies this approach, including these 5 principles that I mentioned. Even this year, we have taken out a number of regulations: urban cooperative banks, risk weights to NBFCs, the provisioning requirements for government guaranteed security receipts, priority sector lending guidelines were revised to boost credit to the undeserved segments. We have rationalized the runoff factors for the LCR. It will hopefully release liquidity of about 6 percentage points. Similarly, we have come out with comprehensive and rationalized regulatory framework for investments in alternative investment funds, co-lending, non-bank, non-fund-based facilities, project finance, and gold loans. All these are examples of how we have been agile, we have been consultative, evidence-oriented, principle-based, and proportional in our regulation making. Going forward, we will continue with this approach. Our focus will be threefold. First and foremost, we will continue strengthening financial stability. This is our primary objective. This is the foundation on which this whole system is built. And so we do intend to implement the Basel III guidelines for market They're already the draft is already there. Similarly, credit and operational risk from 1st April 2027, for which credit risk and ECL-related draft guidelines are now proposed to be issued soon. The remaining are already issued in one form or the other. Similarly, the forms of business circular is also planned to be finalized quickly. Second, we will endeavor to enhance ease of doing business. A lot of this has been talked about, and the government is also on its part doing its bit, having set up some task forces for enhancing doing of business, both at state as well as at central level. We have already in this regard rationalized a number of our regulations. The number of returns that regulated entities have to submit to us is an example of this. And now we are in the process, as I mentioned earlier, of consolidating all the regulations, and we have lots of them, thousands of them, into few regulations so that it becomes simpler, easier for you to comprehend and understand. In our pursuit for making principle-based framework, I would like to mention here that we wanted to give autonomy to the boards of the respective entities to frame policies, while the intent was to leave the detailed policy making from the regulator to the banks. What it has done is perhaps that it has overburdened some of the boards of the regulated entities. Therefore, we are trying to rationalize now these macro policies that need to be approved by the boards of the regulated entities and leave the procedural and routine matters with the management under the board, so that the board gets quality time to deliberate on strategic and important matters. This is one concern which has been coming to us, and we will try to address this. Third, we are examining measures to expand bank credit. The BCG report also mentions about it. How can we enhance credit across sectors, sunrise sectors? Mr. Agrawal mentioned about the sunrise sectors, about MSMEs and all other sectors. And so how we can do that so that the needs of our economy can be met by all the regulated entities, banking as well as non-banking, is one constant endeavor of Reserve Bank of India, and we'll continue to move that path. The other one will be as to how we reduce the cost of intermediation. Some figures were presented in the BCG report as to how cost of intermediation has gone up. It's for all of us to understand as to the reasons thereof. I think there are a lot of things happening, and so we need to understand that a little better. I think the base in 2010 that has been taken, the asset mix perhaps was very different. The size of loans have also now, having the banking industry now shifting towards RAM, that has reduced the loan sizes. The asset quality review perhaps also has had some impact on this. So we all need to understand as to what can be done in this regard. As announced earlier, we propose to set up a regulatory review cell. It will have the mandate to review all regulations at least once in 5 to 7 years. The objective will be to see if those regulations are still necessary, whether they are become redundant or whether they need any change, whether they are consistent and clear across different regulations, and whether there is any unaddressed or any emerging risk which we need to take care of. The last 3 points that I mentioned, Mr. Sethi already mentioned in his speech, relate to the priorities for our banking industry. And the first one of them is financial inclusion. economic development is incomplete, we believe, if it is not inclusive. We believe in the adage, if you want to go fast, go alone, but if you want to go far, go together. And so it's very important that all of us take everyone along, and especially those at the bottom of the pyramid. We have made considerable progress in financial inclusion over the years, as witnessed or as reflected by the Financial Inclusion Index, which is constructed by the Reserve Bank of India. Notwithstanding the considerable progress, the FI index points towards scope for further improvement, especially in usage and quality, while also addressing the gaps in access. Let us remember that we have a responsibility to the people, to all the people of our country, and 2/3 of them reside in rural areas. While we have provided banking access to almost all villages since the inception of the Pradhan Mantri Jan Dhan Yojana, within a radius of 5 kilometers, there is still scope to enhance it. I have been mentioning about it, and I reiterate that the business correspondence is a very effective channel for reaching out and providing services in sparsely populated areas of our country. This channel needs to be strengthened. Not only is there a need to augment them, increase the number of the BCs, but there is also a need to train them and to expand the number of services they can provide. I think this will be a win-win, for the banking industry as well as for the customers. On the one hand, this will make the BCs financially viable and sustainable. On the other hand, it will also improve quality and reach of the services. You are all aware that you have launched a program from 1st July to 30th September of reaching out to each of our Gram Panchayats, 270,000 of them in all. I commend you for this initiative, and I urge you all to step up your efforts through these camps for enhancing financial inclusion, including re-KYC, which has now fallen due as the Jan Dhan completes 10 years, and that is the period that has been given for doing a re-KYC. Another area of focus, as mentioned by previous speakers, for the banks has to be MSMEs, which contribute significantly to our employment, exports, and to our GDP. There is a significant credit gap to MSMEs, ULI, and other digital infrastructure can be very useful in this regard. And so I exhort all of you towards further accelerating financial inclusion. Coming to customer service, customers, I mentioned earlier in my MPC statement the other day that they are the raison d'etre, or the reason of our being. Customer centricity is fundamental for sustainable growth of any business. And at the Reserve Bank, we are therefore passionately driven by the objective of customer centricity, key fact statements, and integrating explicit conduct-related aspects in our regulations are some of the examples in this regard. Recently revised guidelines on prepayment charges and draft guidelines on settlement of claims in respect of deceased customers also reflect our customer-first approach. Similarly, regulated entities must focus on excellent and seamless service and experience, creating customer delight. They need to be transparent, fair, and responsive. While digitalization is a key, the human aspect too cannot be neglected, for which training, especially on behavioral aspects, needs to be emphasized. I had on an earlier occasion urged the banks to enable the use of the CKYCR. Again, this was an issue which has been mentioned, issue number 2, something which the government needs to do, but at the same time the banks too have a big role to play. I think the government has already come out with a framework so that the KYC, once done by one regulated entity of any regulator in the financial sector, can be used by the regulated entity of any regulated entity of any financial sector regulator. So this is a great framework that they have brought about. For this, the CKYCR is the building block or the master key on which this will reside. I urge all of you to kindly make effective use of the CKYCR. Similarly, I had highlighted the number of grievances escalating at the RBI Ombudsman in one of my earlier interventions. We need all of us, the regulated entities and the RBI together, to put in place an effective grievance redressal mechanism where officers are suitably empowered to take decisions in consumer interest. We on our part are in the process of reviewing two frameworks. One, the internal ombudsman framework at the level of the REs to further strengthen as to how you can further strengthen it so that the complaints get resolved effectively within the institution itself. We have had discussions with IBA in this regard. We'll be issuing a draft for consultation and we will look forward to your suggestions. Similarly, the Reserve Bank integrated ombudsman system where the grievances then escalate upwards to the Reserve Bank, that is also being reviewed and we will further strengthen it going forward. The use of technology, that's another very important piece, again came up in the BCG report, so I'm not actually speaking anything new. I think all of you know the importance of financial inclusion, customer centricity, and the use of technology. It is a sine qua non for any business. It is advancing at such a rapid pace at homes, families, workplaces, that no one can actually ignore it. And it has become, the core engine for improving decision-making and customer service, moving far beyond its traditional role of driving efficiency. Again, that was also highlighted in the BCG report. So regulated entities need to accelerate their adoption as they strive to enhance credit and reduce costs. RBI too has adopted technology in all its functions. The account aggregator ecosystem is empowering customers with control over their financial data. Unified lending interface is making credit delivery seamless, making it truly transformative. We will further strengthen these platforms. We have implemented Pravaha platform for improving services to regulated entities. We will continue to embrace technology, including AI and ML, and we expect all regulated entities to also invest in them for their benefit and for the benefit of the customers. To conclude, I would like to emphasize that we might seem to be on opposite sides, with the regulated entities trying to accelerate growth and the regulators focusing on stability, but we actually have the same objectives. We are in the same team. We have the same shared vision of a Viksit Bharat. There is no tussle between financial stability and growth. Financial stability and price stability do not inhibit growth. Far from it, they are essential for sustainable growth. I look forward to working together with the regulated entities to improve the efficiency and effectiveness of our financial intermediation to ensure that the due benefits reach the people of our nation. Likewise, on the demand side, I urge the industry, and some of the leading lights are present here, to invest boldly and champion the entrepreneurial spirit that defines our nation. At a time when the balance sheets of the banks and the corporates are at their best, they should come together and drive the animal spirits to create an investment cycle which is so important at this juncture. Lastly, in your respective roles, I urge you not to lose sight of the people you are serving. At the cost of being a bit sermonic, I must mention that if there is any doubt in your mind, espouse the philosophies of Gandhi's talisman or Antayodhya. Take decisions keeping in mind how your actions will impact the most vulnerable person in our country. I wish the conference a huge success. Thank you. Namaskar. Jai Hind.
Thank you so much, sir, for your very inspiring address, and your insights have provided both clarity and direction, and these would certainly help as the guiding force for the banking sector and boost the confidence when you say that we're all on the same team to work towards a common purpose. So that's really a very, very positive statement for everybody here. Honorable Governor has agreed to take a few questions. I'll call out some of our members. I'll start with Mr. Anand Goenka, Senior Vice President, FICCI.
So I just asked you this question a few minutes ago, but just for the larger audience, we are facing various tariff challenges, particularly the 50% tariff from the US. In light of that, we see MSMEs and specific sectors getting affected. And in that light, how do you see the future for these industries, and do you see RBI taking any action if that tariff continues?
I think I'm audible, right? It's on. Yeah, so we discussed this while we were, coming for this conference, and the RBI has always been, very proactive in whatever needs to be done for the betterment, for the advancement and the growth of our country. Insofar as tariffs are concerned, we had post the April announcements by US of increased tariffs of 26% at that point of time. We had projected downwards our GDP growth by 20 basis points. And now we await, after that, there has been another additional 25% tariff, making it 50%. It is yet to kick in. Another couple of days, we are hopeful that the tariff negotiations, the tariff will play out, and the impact will be minimal. Of course, there are few sectors. If these tariffs remain, then there will be a few sectors. 45%, as you are aware, are outside the tariff regime, but the remaining 55%, some of them, like gems and jewelry, textiles, apparel, shrimps, MSMEs that you mentioned, there will be some, there can be a potential impact on them. The government on its part has set up, and I mentioned, alluded to those reforms that the government is looking at. The government is also looking at free trade agreement, some of which has already been in the works for some time. And we, on our part from the Reserve Bank, we had, as you are aware, we have been on an easing cycle. We reduced repo rate by about 100 basis points. We have provided ample liquidity to the banking sector, and whatever else is required to support the growth of the economy, and including those of sectors which are impacted more. If it so happens, we will not be found wanting in our job. Thank you.
May I request Mr. Vijay Shankar, Vice President, FICCI, for the next question.
Thank you, Governor. One of the stated objectives of the Government of India is to promote the use of the local currency rupee in settling trade transactions. This is important as it reduces transaction costs, minimizes exchange rate risks, and makes it far more convenient for Indian companies. I think after you've taken over, the RBI has introduced a series of policy actions, including the August 5th circular, where you have given the authorized dealers the power to open Vostro Rupee accounts without coming back to the RBI. Sir, in this direction towards the greater internationalization of the rupee, how do you foresee the path ahead, sir?
Yeah, this is an important area on which Reserve Bank of India has been working now for a long time. It's important for countries to develop trade in local currencies. And so the Reserve Bank also has been moving in this direction. A number of steps have been taken. You highlighted, some of those steps. We have now today, as we speak, agreements with 4 countries, Maldives, Mauritius, Indonesia, and UAE. And trade is starting, it has been happening, in the local currencies. It will certainly help, the industry, the economy as a whole, because it cushions us from the volatility of the foreign exchange price movements. And we will continue to promote this. How do I foresee the path forward? Let me mention that this is a slow process. It's a process and it's a slow process. It will evolve. It will take years. It will take decades for trade, to happen in local currencies.
Thank you, sir. Mr. Rashesh Shah, past President FICCI.
Thank you, sir. It was a great honor listening to you. Your calmness as well as your clarity has been very encouraging. The 5 principles for regulation, the 3 focus areas. And as you, sir, very correctly said, an accelerator and a brake are both very important for the car. And if the brake is strong, the accelerator can actually do very well. So thank you for that. The question I have, sir, is we have all spoken about MSME credit and how to grow that. And one of the important aspect of that is NBFCs. NBFCs are usually very ahead in MSME credit as well as the new to credit market segment. NBFCs have over a period of time struggled for liquidity and getting funding windows outside of banks because the interconnectedness with the bank is also an issue. So are there any thoughts on RBI's front of how do we envisage the expanding the funding opportunities for NBFCs? In COVID time, we had done LTROs and PCGs and others, but if there are any more thoughts on that, it will be great to hear that.
No, let me emphasize, first of all, that, and I did mention NBFCs in the same breath as I mentioned banks, that the NBFCs are also equally important for us in RBI as the others, as the other regulated entities, including the banks, as you have mentioned. They serve the last mile. And so in that context, their importance is even more. They are now 65 lakh, if you include HFCs, they are about 65 lakh crore of credit, which is about 20% of the total credit that is given to the non-financial sector by all put together. We have taken a number of measures for improving the flow of funds to NBFCs. And we continue to, see what are other possible measures to augment them. There are specialized institutions which have been set up by the government, the All India Financial Institutions, NABARD for Agri, the National Housing Board for Housing, and then there is Mudra and SIDBI for MSMEs and so on and so forth, which provide some refinance to these NBFCs. The Reserve Bank itself has also at times, but that's more, in times of stress. So there is no proposal to provide a standing liquidity facility like we have for the banks, because the purpose of this facility is very different. But of course, we have been proactive, and wherever there is a stress, we have provided lending refinance or liquidity support to these NBFCs, and we will, even in times needed, we will continue to provide whatever liquidity support is needed for them. If there are any special thoughts that you have, and we do engage with the NBFCs and their representatives, further thoughts can certainly be developed because they are an important player in our national economy.
Thank you, sir. Ms. Naina Lal Kidwai, past President FICCI.
Thank you, sir, for sharing your very open-minded and deep intellect that you apply to these areas as you have traditionally done in all your roles before. We're really looking forward to your leadership. I have a question on fintechs and digital lending. On the one hand, the very important role these platforms have played for the much-needed financial inclusion you have touched on, and also for MSMEs and the speed of credit that it brings. But on the other, the issues around governance, predatory practices, and consumer protection, which also come to mind. So given the need for this innovation and technology on the one hand, and on the other, issues around systemic resilience, consumer protection, where do you come out on this, and how do you see this going forward?
I don't know how to put it across, but fintech is really very important for us. They are an important partner in this whole ecosystem. And you have yourselves brought out some of the challenges, the importance and the challenges that fintechs bring to the ecosystem. Let me mention that fintechs, that we would like to promote, fintech. I did mention that there is a great need for accelerating adoption of technology in the banking space as well as in the non-banking and other regulated entities. And so fintechs do have a space over there, and we will do whatever is required to promote them with the necessary guardrails. You rightly mentioned that the issue over there primarily is conduct related, not so much prudential, because they don't take risk on their own books. And so we have taken over the last few years a number of steps in this regard. We came out with a framework for digital lending. We then further improved it with some revisions in the digital lending framework. And we continue to improve our framework so that we don't inhibit them, but we promote them. Recently, we came out with a directory of the digital lending apps which are recognized by the regulated entities. So this will also help in consumer protection and in differentiating, between the good and those which are not legal, So this is a constant process, and we will continue to do whatever is required to further promote them rather than, to inhibit or regulate or control them.
Thank you so much, sir, for the questions as well. So may I request everyone for a further round of applause when we welcoming him and thanking him for being so candid and giving us very important direction as well. May I, with these words, request Mr. Atul Goyal, the Chief Executive IBA, for his closing remarks. And thank you so much, Mr. Goyal, for all your support in putting this together as a truthful partner. Thank you.
Thank you, Jyoti. The support of the IBA will always be there with the FICCI also. Yeah. Very good morning to everybody. Honorable Governor, Reserve Bank of India, Shri Sanjay Malhotra ji, Chief Guest of the today's event, respected Shri C.S. Shetty, Chairman IBA, as well as the Chairman State Bank of India, Shri Harshvardhan Agrawal ji, President FICCI, Ms. Jyoti Vij, Director General FICCI, Sri Ruchir Goyal, MD and Senior Partner of BCG, distinguished guests from the banking and the corporate sector, and all the participants and the media person to this conference. It is my great pleasure to welcome you all to FIBAC 2025. The annual conference has grown into one of the most distinguished forum for the India's banking and the financial sector, bringing the leaders from the across the country and around the world. I extend deepest gratitude to the Honorable Governor, Reserve Bank of India, for graciously joining us on this special occasion. The invaluable insights and the visionary guidance should be in the has address. They have truly inspired us and has strengthened our vision for the banking sector. Thanks to the leadership of Sri Malhotra sir, RBI Governor, the RBI has consistently introduced the path-breaking regulatory measures and forward-looking initiatives that has transformed our financial landscape. And if see the today's discussion, the Governor sir has talked about the geopolitical tension, but in spite of the challenges which we are facing, he has told to achieve the vision of the Viksit Bharat. And he has told the huge progress the country has made after the independence in all the sector, whether it is education, the Indian economy, and he has told about this, the inflation also 1.6, the lowest inflation after the last 8 years. And he has told about the healthy balance sheet of the banks and the least NPA, and the profitability is increasing. And he has also told they have issued the guidelines for the gold loan, project finance, the non-fund and the co-lending, and the guidelines for the ECL is proposed to be issued also. He has also talked about the high forex reserve of the country, and he has told about the KYC and the PMJDY and use of the CKYC also. And he has given the mantra of the 5 points. That is the monetary policy, regulation, financial inclusion, customer service, and the technology. And the most important part of the today's deliberation of the Governor sir, he has told the open for the suggestion. He is ready for taking the open suggestion for which can help the growth of the country also. And he has also talked about the customer service importance, the settlement of the claim for the decrease, as well as the prepayment charges. And sir, for the information of the Governor sir, IBA is working in all the things, whatever you have told sir, and the Jan Samarth portal, all the scheme of the government is routing through the Jan Samarth portal, and IBA has made the common loan policy among the banking sector, whether it is the housing loan for the low income group, whether the model education loan scheme, the PM Surya Grah for the rooftop. Now we have done the common application form on the MSME, because there is a lot of talk about the MSME. Up to 1 crore rupees common loan application form, and there is another scheme of the EQN, Kisan Upaj Nidhi, that is for the farmers, how to increase their income also, so they can pledge their goods and they can take the loan. It is a ENWR, negotiable warehousing receipt, and the startup loan, the city have also touched up to 20 crore rupees, the common loan. So this is as I told you, the most part of the today's deliberation ki sir is open for all the, and I want to place on the record when we are meeting, we are approachable and they are hearing our thoughts also, and they are supporting the IBA. The theme of the today's conference, the charting new frontier, is the forward looking and the suitable for the evolving the state of affairs around the world in general and India in particular. Over the last few years, the pace of the change is so sweet. We really have to plan strategically well in advance to meet the need of the dynamic world. Navigating through the period of the significant economic uncertainty characterized by successive geopolitical tension and macroeconomic volatility, our country has presented a picture of resilience largely due to carefully forward-looking policies, concerned efforts to all the stakeholders, and more reliance on domestic drivers for growth. The government has clearly crafted a vision of the Viksit Bharat 2047 to drive the mission of making India a completely developed nation by its 100th anniversary of independence in 2047. Honorable Prime Minister, in his address on the Independence Day, which was the theme Naya Bharat, highlighted the need to focus on the self-reliance, innovation, and citizen empowerment in keeping with the overall vision of the country being the major financial intermediaries of the economy. Banks have a key role to play as a driver of the growth. Presently, Indian banking sector is profitable, well capitalized, and is in a position to fund growth. The path forward rests on the 5 imperatives: how to expanding the retail and the MSME credit. The another is the financing new capex, as the report of the BCG also. The unlocking the productivity with AI and Gen AI, embedding the resilience in the risk management, and the last is the corporate governance. Sir has also touched about the compliance also. Before the concluding this session, I have the honor to propose a vote of thanks on this occasion. Let me express our sincere gratitude to respective Governor Sri Malhotra ji, who has spared his valuable time for this event, sir. Sir, we are grateful to you for your nice presence, sir. Sir, through your inaugural address, you have shared your perspective how to fulfill aspiration of the growing economy like India and the new frontiers from the regulatory perspective. I also take this opportunity to thank Sri Sethi sir, Chairman IBA as well as the Chairman SBI, who has guided us in developing the framework of this 2 days conference. Sri Sethi has touched about the use of the digital AI and concern about the concern about the geopolitics tension also, and he has talked about the supply chain and use of the DPI-1 as well as the DPI-2. Let me extend the thanks to the Harshvardhan Agrawal ji and Madam Jyoti ji. Mr. Harshvardhan Agrawal has also touched the India in the banking sector is not only for the growth, they are also for the national building. And who has put the, Madam Jyoti has put the lot of effort right from the conceptualization of this program. We also take this opportunity to express our thanks to the knowledge partner BCG for guiding us to develop this theme and overall contents of this conference. Sri Ruchir Goyal has provided an overview of the theme of the conference, and in his presentation also the how to give the loan to the new to bank, and the growth should be 11 to 15%. The banking asset to the GDP, which is as on 8.9, he has told it should be 1.5, and he has told about the cost to income ratio increasing, whether we are taking the benefit of the IT expenditure or not. So considerable research has gone into the report just released. I am sure the report could provide the further insight into the overall theme of the conference. We also thank all the participants who have registered for this event, and the number are quite encouraging. Thanks to the team FICCI and IBA for all their efforts also. I am sure the participants would gain the further insight through panel discussion in today's event. Thank you. Namaskar. Jai Hind.
So on that note, we conclude the inaugural session. I request all the dignitaries on the dais to kindly step ahead for a picture, please. Thank you. The rest of you, please remain seated. And take note that we are skipping the break in interest of time. We are beginning the first business session immediately. So requesting everybody's cooperation, please remain in your seats. It will just take a couple of moments for a quick changeover, and we will be set to begin the first business session of day 1. Thank you. So ladies and gentlemen, requesting one and all to please be in your seats. It will take us a couple of minutes, maybe a minute or two, to just set up the session. The first business session is a panel discussion on charting new frontiers. This will be moderated by